I guess yet again I'll reference to one of your pieces that you posted on Substack, and you called it "Why is Japan so important?" Tell me, Russell, is Japan really that important in the macro environment right now, and is it even worth following by someone like me?
Oh yeah, totally. I mean, Europe and Japan have a lot in common in some ways, but Japan is very special. What I find fascinating about Japan is they, before China came along, had by far the world's biggest foreign reserves. You're probably aware of that, right? How much of those foreign reserves is held in gold?
I know because I looked it up because I wanted to ask you about it. Why doesn't Japan like gold? Why aren't they buying any gold? And why haven't they not been buying gold while Russia and China have been stocking up on gold? So
Okay, so the thing is, and I am a little bit biased here, but I think it's true. And so like when I went to Japan first time in '91, I was like 17. It was like going to the future. It still has that sort of vibe a little bit, but it's like, amazing train networks, technology everywhere, and they have companies that are thousands of years old. And the Japanese are very advanced processes and business ideas. And so it still feels like you're going to the future. Now, the Japanese looked at the global economic model that existed, pre-1970s, where governments used to buy gold as reserves, and there was a commodity-based exchange rate system. Okay, right? And I think what the Japanese said to themselves is like, well, hang on, right? We have no natural resources, okay, right? We import everything. And why would we endorse a financial model that puts upward pressure on commodity prices? Why would we go out of our way to try and reduce our living standards? Do you see what I'm saying? And they would also probably be aware that if commodity prices go up too much, it actually crushes exports or crushes demand in the US, other markets. And Japanese have a huge sort of export-led economy. So they probably quite correctly, sat back a second, looked at this system that had existed for a long time, and went, it makes no sense for us to buy gold. It's against our interests to buy gold, as a nation, right? What if we buy treasuries instead, right? So if we buy treasuries instead, right, we're not putting upward pressure on commodities, right? We're putting downward pressure on interest rates with our major trade partners so we can expand our trade, yeah, and we earn an income on it. And so the Japanese went, this is a great system for us. It benefits us. It benefits our ally, our military ally. And so they've always just said, we're going to buy treasuries. And the reality as well is that the treasuries have had a tendency to rally in problem times, while gold has the unfortunate habit of actually falling sometimes during crises. Asian financial crisis, 2008 also fell. So it's not a great hedge, if that makes sense. And so I'm looking at it and thinking, this is a very interesting way of thinking about it. It makes a lot of sense. And what you probably is less well known. So Japanese biggest buyers are treasury owners of treasuries. Yeah. But the Japanese banks have been often providing the balance sheet to big investment banks in the States pre-GFC. Right. So Goldman's used to have a big relationship with SMBC. And so Japan used to be like the balance sheet for corporate America. And so the relationship with the States is very, very strong. And so what I would say, Japan is still important, very important. And then I think if you really, what would be, I think, interesting, and what I think is a very interesting period, is that normally the US and Japan are still very tight military allies.
Well, that's what I want to talk. Sorry for interrupting here, but that's something that I did want to talk about because I'm a member of I have a Discord server, and a member of the server wanted me to ask you about sort of the future of the yen, exactly because of that. He said that Japan is the biggest, as you're saying, Japan is the biggest purchaser of used U.S. treasuries, and with the yen now sort of being on a lot of people saying it's going to its deathbed. It sort of gets harder to purchase or even hedge against foreign treasuries, especially the ones of countries with a strengthening currency like the US. So like where's this going? What's happening there with the yen and all that?
I think it's the yen is just reacting to its deteriorating trade of terms of trade. So it imports all these commodities. So if you looked at terms of trade in yen, it's just moving in line with it at the moment. I don't see any particular issue there. The bigger issue I'd have, and you're already starting to see signs of it, is so when Russia invaded Ukraine, the Western world, right, Europe, US, other places came together and said Russia's in trouble. But in Asia, what you've seen is far more hedging of bets because the reality, and I think this is a big issue for Japan, is that until 1945, well, actually, until the 1900s, Japan and China were very close allies, and they have a lot of cultural crossover and similarities. And then basically the Japanese, first to industrialize, realized they could beat up China and take lots of land and resources. And then post World War II, with the sort of Cold War, became a very, a strong ally versus the Soviet Union and China, and a strong ally to the States. But the question you have to ask yourself is, like, China and Japan are never going to be, they're not moving apart. They're always going to be exactly where they are, right? And there must be at least questions asked in Japan about, especially since Trump came to power, of, can we rely on US military might to protect us all the time? And if not, do we need to come to an understanding with China? Do you see what I'm saying? And, or do we just keep playing for time and hope that there's a coup in China and a military collapse or something like that? But I don't know. That's what but what would be interesting is let's say US-Chinese relations deteriorate further, and they put some of the dollar sanctions on dealing with China that we have with Russia, okay? Which would be very, very detrimental for an export-oriented economy like Japan. Yeah. Now, let's say they decide that they're not going to follow that policy, right? They then need to use less dollars in their trade. And that would naturally lead to, more gold-related type trade. Do you see what I'm saying? So the politics is leading to the US dollar and US treasuries becoming potentially less important. Yeah, but it's all politics driven. But I can see a world where the Japanese go, yeah, we'd like to change China and make China more like the States, but do we risk a great, a depression type economy for that? It was a sort of thinking that explained, the German-Russian relationships for a long time.
But would that also be the thing that explains why their stock market hasn't made a new all-time high since what, the late 80s, 80, 89 or something?
Well, do you know what's the thing this is the real question you should be asking, I think people don't ask, is why in what is a functioning democracy has no one seen a pay increase for 30 years? Right?
Well, there's no inflation, right? I mean, Japan's
There's
inflation.
But which comes first?
Right. Yeah. The chicken or the egg.
If you're not going to, I go talk to businesses there, and they're so cheap, like amazing restaurants. I go, if this restaurant was in London, you could charge 3-4 times the price. So if we try and raise our prices, people go elsewhere because they haven't had a pay increase for 30 years. And the question I always ask is, why haven't they had a pay increase? Why is that? What exactly is causing that? And like I said, again, it just comes down to this change in idea where after World War II, we drove pay increases. It's why the experience of, I'd say, my parents, maybe your grandparents or your parents, I don't know, but, it's like so different to, their children, is that basically governments are saying, go have pay increases. And if you think about when you have pay increases, what you're essentially doing is you're making young people rich and old people poor,
Hmm.
right?
Right.
When you don't have pay increases, you're making old people rich and young people poor, more or less. And you can sort of politically justify it perhaps by saying, well, eventually those young people will get old and be rich as well. But I don't think that's exactly how it's working out, to be honest with you. Like I said, politics is changing. Yeah. The thing is, what is really frustrating about it is what I liked about the free market system was that it was fair and everyone could understand it, right? And it was this competition, and it had a sort of system that worked, predictable system. The problem with this system that we're moving to is just like we like to say, Alibaba is a great example. Alibaba is a good company. It did a fantastic job. It's the Amazon of China. But the government just said, you know what, we don't like what you're doing. And it's lost 70, 80% of its value,
Hmm.
right? Now, but and the same in Europe to a degree, same in the States now. How is this company positioned? How does it relate to political environment? Where are we going? Same with Russia, same with a lot of places. And then it naturally favors insiders over, over sort of independent small people. I
Hmm.
dislike that. But I think that's where we're going.
Are they ever going to go back to an inflationary environment, which I would expect would prompt up their stock market, because the central bank of Japan seems to be sort of aligning with them and giving hints of, oh, we're going to pump money into. It's not going to happen as directly, but it's what it's going to come down. It's what it's going to come down to. It's pumping money into the stock market. So if that were true, would it mean that Japan is the ultimate contrarian investment right now, beaten down for 40 years or whatever, and now, or 30 years, and now it's going to start going back up again? Is that a possible scenario?
I think so. I mean, if they start raising wages in Japan, right, then the effect it would have on asset markets would be phenomenal. And in one of the notes I published, I don't know where it is. I forgot which one it is now. So if you can go look on the website. But what's amazing is back in the early 90s, farmland in Japan was 5 times the price of US farmland. Okay. Now Japanese farmland is cheaper than US farmland. Right. So yes, from that for me sort of says, yes, Japanese assets look very, very attractive. But what you really need is a mindset to change where they start raising wages again. And I got this really crazy idea, as you mentioned it earlier, is a lot of people sort of cite demographics as why inflation and
Mm.
yields are so low. Sometimes I wonder, well, if you deliberately go out and set up a policy that says we're going to pay labor less, right, and capital more, which is what we've had, you sort of basically sending people a sort of signal to say, you know what, you need to have less kids and invest more in education for them, because that's how we're going to determine the returns in the future.
Mm.
If you suddenly reverse that to say, actually, you get paid more for working and less for capital, so interest rates go up, you might see a baby boom come like you saw in the post-World War II era, which was again an era where it favored labor. And one of the anecdotes I'll give you. So we're talking about go-karting. I think what you've done is corporate go-karting. My son is going to compete in the British Champs this year to try and become the okay. But basically,
Nice.
British Champs is held all over the UK. So I spent a lot of time in very different parts of the UK, and so I've been spending a lot of time up in Sunderland, which is a northeast of England, right? So like the Premier Inn, which is a hotel we stay at, is £30 a night. This is a very cheap hotel.
Was that 30
and
pounds a night?
30.
Wow, that's nothing. It's like prices here in Belgium are like 5 times that.
Well, I spend more on the wine and beer and food in the restaurant that's attached to it than the hotel.
Right.
But it's because the go-karting tracks tend to be in areas where no one can complain about the noise and the traffic and other stuff like that.
Okay.
But we always have the radio on when we're driving around. And when I went up last year, they were advertising to become a truck driver. 6 month, I think it was like 2-3 months of to get your license, and then £50,000 income, which I thought was very good.
That's decent.
It's very decent because that area is, like I said, £30 for a hotel. £50,000 going to buy you a nice lifestyle. And when we were up there last weekend, they were advertising on the radio for like healthcare nurse jobs at like £20,000. Now, £20,000 is not a lot, but it buys a lot more in that part of the world than it does down here in London. And I was just thinking, what, this is what you would expect to see if this thesis was playing out. And maybe coming right back to my earlier questions, my earlier answer is that one of the things I do for me is, like, if you're thinking about an investing idea, so you're obviously very interested in Japan, right? My advice is go and have a look, get on a plane, go out there, travel around, talk to people. And then you will get an idea of whether that is right or wrong, because you'll see what the relative prices are. You'll see what sort of businesses there are, what's happening. I always have said to people, if you really like an idea of, or want to invest somewhere, go there first, have a look, and then you get a good idea of whether this makes sense or not.
How would you approach it though? If you go there, you come back, would you buy a broad market ETF? Would you start targeting companies? Would you start a business over there, contract manufacturing or whatever? Because that's what paid off in China last time.
Yeah, I'd say just be open to all those different ideas and then see which one works best. Maybe try a bit of each and then, and then go from there. What I will tell you is that at current exchange rates, Japan is very cheap. It's certainly worth a visit, even just for the fun. The fun of it is very cheap. I mean, that's been their policy, but the politics there is changing because my sister-in-law is Japanese, and she was just unprompted saying, "I don't understand the Bank of Japan policy. All it does is make Japanese people poorer," which is 100% true.
But they don't have inflation, so how do they make them poor?
They still have to eat food and buy petrol.
Right. So
the yen keeps getting weaker, and they import.
Yep.
They import so they don't have any inflation because wages aren't going up, but it's not stopping the price of food going up or the price of energy going up. And in fact, the really weird thing about the Bank of Japan policy is it's made Japan so cheap. It has all these Chinese who theoretically have a GDP per capita that's only 1/5 of Japan. They all go on holiday in Japan, but you don't have Japanese going on holiday in China. So something is very wrong with how that system works. Like I said, I think the policy has become in Japan, like all things, politics can get captured. I think the business have captured Japanese policy. They're saying we want very cheap wages so we can compete, right? But I don't think it works anymore.
What do you then think of the approach that Buffett is having towards Japan? I think it was, 2020? He bought like 5% of the top 5 companies, top 5 trading companies, I guess is what they call them. I remember it vaguely, but he bought like big stakes in like Mitsubishi. I think, and some of these companies. Because if the thesis is correct, the way that I'm understanding is that if Japan reverses course from here on, it could be some sort of a scenario as to what happened in the US between after the Second World War and the first big crash, which was in the 80s. So you could have that same run up in Japan is it?
I think it's they're the biggest investors in a lot of different commodities all over Asia and in the rest of the world. So you're really buying a commodity play at the low in the cycle, which I agreed with. The other thing is that these companies are all now buying back shares aggressively. So he had huge success with the Apple share buybacks. So that makes a lot of sense as well. I think that, and I've heard on the grapevine that he's bought a lot of those purchases by borrowing the yen directly from the banks and paying, 0.5% on that, even though those clearinghouses pay out trading houses pay out like 6-7% dividend yields. So what he has on is a lot of different trades where he's getting paid by everyone to put them on, which is a classic sort of Warren Buffett trade. So I quite like them. I think they look very interesting. Yeah. The only risk you run with them is a sudden and complete collapse of like the Chinese economy. But I think that looks pretty unlikely.
Well, you're not making me buy a house at like 0% mortgage rate in Japan and just invest my money in like passive investments like dividend paying companies and just live off of that for probably the next 30 years or something. That'd be very cool.
That's also absolutely fine. I mean, look, the reality is if you find a great company at a good price, and you really understand that company, then I would always recommend doing that. All I'm saying is that sometimes there are big shifts coming, and being just aware of them and understanding them can make a big difference. And I just think, I must say, I just feel if you got the gist of what we've been talking about, I feel like there is this shift coming that makes sense or happening. And it's going to have quite profound changes on asset markets. If I'm right about this shift from capital to labor, I would expect asset markets not to do great.
Do you feel comfortable talking about some of the, because you said if you find a great company, it's always worth holding. Do you feel comfortable talking about specific companies or something that's worth looking into when it comes down to Japan?
I'll give you an example, and this company is no longer listed, so that's good. But I'll give you an example of how I think about it. So many years ago, I went to see my friend in Perth, in Australia, and he took me to Fremantle, which is this town just south of Perth, and we went to this sort of brewery/restaurant, right? And we drank fantastic beers called Little Creatures, very popular in Australia. And about a year later, I read that they listed on the stock exchange in Australia. I thought this is and then I read that Lion Nathan, which is a big brewer down there, had already taken a 20% stake. I thought, well, you got this great company, great beer, and you got like a big investor already has a stake in them, right? And I love the product. Right? After I've been there, always drinking it. So I was like, okay. So I put some money. I didn't have much money in there, but I had what I could get together. I put into it. And the stock went up 5 times, and then this big brewer bought them out, and I got dividends all the way along. And so whenever I find a company like that, right, like a company where it's like a great product, great management, and you can see that, there's like a natural exit to it, I always like to put money into it if I can. I haven't done that a lot in the last 10, 15 years because as I was running a fund, I was extremely restricted on what I could do from a personal level. I always look around for those types of, good companies. There's always, and then, so and generally I would say to people, if you're really invested in, often what people will do is they've made a lot of money in a stock. They go, should I sell it and do something else? I go, do you need to sell it? If they don't need to sell it, then it very rarely makes sense to sell it. Unless you need the money, it very rarely makes sense to sell an asset, especially when you're trying to accumulate. So only if you have a very strong reason. So you suddenly go, oh, actually, this company could go bankrupt, for example. Then it's a good reason to get out. And what's been interesting, why macro investors look so silly, is we basically, by moving to a corporate government guarantee, bankruptcies have disappeared, more or less. Yeah. So that's made macro investing look much more problematic. So the best time for macro investors will be if commodity prices go up a lot, the central banks suddenly decide we need to have a massive recession to get commodity prices down.
Right.
They're a long way from that type of mentality. Europe still has negative interest rates, even though it doesn't make any sense, right?
No, never
Makes
made
no
any
sense.
sense.
Makes no sense whatsoever. It's it's the only way it makes sense is political.